Good morning, everyone. Let's look at your markets for today. So, on the economic calendar, we don't have any real data releases. We've got a bunch of speeches by various members of various countries and no actual data. Except for the yen, the trade balances came out worse than expected or worse than forecast, but that's come and gone, so you can't really capitalize on that anymore. Now we've got Jerome Powell speaking, Fed chairman of the US Fed. So obviously that will give us some volume if he says something people don't want to hear, or if he says something that might spike some hopes. And Christine Lagarde speaking as well. She seems to be speaking every day now. So with the exception of these speeches, nothing else in terms of data to look forward to. We should see everything pretty neutral across the board. We'll discuss it in more detail in a second. Yeah, pretty neutral, I think. It's a Monday morning, so we don't really get the movement indicators on a Monday morning. So I want to do something slightly different today. I opened a chart. Let's turn to the charts. I opened a blank chart on gold. And what I want to do is a full top-down analysis. We've got this wedge forming. We need to know which direction is going to break out. Now, to do a top-down analysis, we zoom out. We should go to the daily first. And from here, we'll draw in that trend line, as we can clearly see, 1, 2, and 3. And then ray that. I want to make it a greenish color because it's the resistance trend line. Something like that. And then on the bottom end, we've got this one there. 1, 2, 3. We'll make that a pinkish color or something reddish. Let's go for orange red. That should work. So that's on the daily, the big triangle forming there. Then we turn to the H4. And as you can see, it's approaching the wedge and it's going to break out soon. So we need to know where. So on the H4, we're going to look for some horizontal support and resistance levels. So we've got this level there. That one's been key, so I'll leave it white because it's a key level. Then we've got this level here. That level there. And on the downside, we've got this level. You'll see it's respected there and there. Let's just change the color on that one as well. We'll go magenta on this. We'll leave it bottle green, it's fine. It's on the daily that we do magenta. So on the H4, we'll do bottle green. And then another one down here. That one there. Okay. That's the H4 levels. Then I'll turn to the H1. And as you can see, gold is approaching this key level already. I'm going to call it the pivot level today because if it breaks through and keeps going, then it's going to be a very bullish gold signal. If it breaks through this resistance, then we expect it to plummet, or this support orange-red support level. We expect it to plummet very far down to this level. So, but that level for me is key to confirm a bullish sentiment. So that'll be our pivot level. Okay, so now we've got those, and from this we can't really see anything. We don't know which direction it's going to go. You know, it's pretty much in the middle of the wedge. If you look at that line where price is right where the two trend lines intersect. So it's literally in the very middle of the actual current wedge. So it could go either way. Now, what we want to see, or what we would then use to determine what gold is going to do, is the thing it's most correlated to. So if I turn back to this, I'll show you this chart quickly. This is, let's just get rid of these ads. I don't use TradingView often, but they have this compare function at the top there that's really helpful to show people correlations. So if you look at this blue line versus this orange line. Now, one of them is gold and the other is the dollar index. So obviously, if you look at how they've been moving, you know, if this one comes down, that one goes up, and the opposite, you know, it keeps mirroring each other. So if you don't know what gold is going to do, you could quite easily just use the dollar index and try and discern something from that. So that being said, these two mirror each other, so we'll use the dollar index and see if we can spot anything from there that could give us an indication of direction. Now, if I turn to the dollar index, we immediately see something that's giving us an indication. We've got a huge divergence. As the dollar pushed up, the RSI was not pushing up further, and we've got divergence here. So, as we know, divergence is an indication that momentum is being lost, and that the current trend, in this case, the move to the upside, can't be sustained. So for me, this means that this is going to come down. So if we'll draw in a level somewhere here, and another level in here, we can definitely expect, at the very least, a move from there to there. Okay, so I think we're going to see a pretty big push to the downside coming. Now, I could be wrong. Obviously, this is pure speculation based on one indication of a reversal. So this isn't gospel. There's no definite case here. So we'll also turn to the commitment of traders report, as we've done in the past, see if we can discern anything from that. We'll specifically look at the dollar there. So this row there, what can we see? Not a lot, actually. Total long positions are still close to 10,000, and these are still close to 7,500. So there's been some increase in longs and some increase in shorts, and that's no discernible direction for me. It's pretty neutral, to be honest. I mean, they are so close. It's not even a lot of increases. It's just a few. And, you know, if it's that close to each other, we can't really determine a direction. Here we had it slightly bullish because they removed shorts and added longs. But again, not a lot of positions were opened. So it was pretty neutral on that one as well. So we can't really discern anything from this on the dollar specifically. What we can see is that the Aussie is about to go long because there's a significant amount of shorts and a significant amount of longs increased. So the Aussie was going long, or should have gone long, in the last 4 days, or last 3 days of last week. We can quickly turn back to the charts and confirm that. But in a nutshell, we can't really determine anything from the dollar index on the dollar index based on the commitment of traders report. So that gives us no indication. So what we have is an RSI divergence and nothing else. So we've literally got one thing to kind of support our view, but we've got something else as well. If you turn to trend lines, we've got this, and we've got this, and it's also a triangle forming similar to the one on gold. So something like that. So we can expect a breakout of this. So for me, I would take that as confirmation that gold is going to go up. As soon as we've got this smaller breakout on the dollar index, we can expect this to go long and potentially break that level that's been holding for so long. So that is it for my analysis on gold. I think we're going to see it go long. I think we could potentially see it hit this level. So actually this level. So it's this level. So we could definitely see it push through to that level. So I'm going to do the prediction. What I want to do is a little standard deviation channel from there to there, and then take it from there. So we should see it about here, break through. Okay, so we'll grab that point. Sorry, I just want to check it against the gradient on this level. This is the gradient on this level. Okay, so this one is slightly less. So that's going to be our estimated gradient. It's definitely going to, could actually break through then. Well, we'll see. I mean, there's a level there as well that it could potentially break, so let's draw it in. Okay, so that is my prediction on gold. I could be completely wrong. I could be completely wrong, but I expect to see this. So we'll have to wait and see. Anyway, we can quickly run through the other pairs if you want. Dollar Swissy. No, yeah, dollar Swissy. It looks to be a double top there. Rejection wick there, rejection wick there. It's bouncing off this resistance level. I'm not sure if it'll go up or down, but for me, I'm just staying out of that. This one we predicted a move. To go up there, but I don't think that that's true anymore. It is still kind of moving up, but it's kind of losing momentum at the top here at this level. It's a double top, so I think we could potentially see this reverse on itself. We had a bit of a push to the upside following this breakout, but whether it will go all the way, I think we're going to struggle to see it make it. So I'm gonna remove it for now. So if you do have positions open long side, maybe consider closing them out at this level. I'm no longer confident in this dollar rally that we saw. We had divergence on the Aussie. Convergence, I beg your pardon. We've had convergence on the Aussie CAD pair, so that is also an early indication that the Aussie might strengthen, so I'm just going to stay out of it. As you can see on the other pairs, the Aussie has been actually fighting back. So I do think this is a good indication. Oh, we've got a double bottom here. I might consider going long on this. Okay, fighting back as well. And then on the euro, it's a mirror. It's been fighting back as well. So for me, I would definitely look to go long on the Aussie at this point. I do think it's going to keep going. I'm basing that on the positions from last week on the commitment of traders. So it looks to be strengthening on the Aussie. So we could see that. We could see that definitely be confirmed. Euro Swissy, it's still at that level. It's kind of, you know, up and down around the level. If you change it slightly to where it's supposed to be, you'll see it's still in the channel. So it's not, we're not at a breakout yet, but it has been fighting back. So we'll see. And this one's just been all over the place. We'll keep an eye on it. This one's creating a bit of a triangle as well. So I might trade this later today. We'll do our little breakout box. And if it does break to the downside, I'd rather see it break the upside, but if it does break to the downside, it should come back to this level. Not that one, but that one. So this level. Yeah, euro. I mean, this could potentially go up from there, but it is still hugging that line. So just be cautious on this. Pound dollar. I mean, it's all over the place yet again. I expect it to go up from here, but I'm not going to make a call so early on a Monday on that. This is a nice little upward trending channel, so I would rather support this. Wait for it to come from the bottom of the channel, then take longs, and if it breaks out, very tight stop losses should protect you. Dollar CAD, this is definitely going to go down. I think, I could be wrong, but I do think this is going to come down. So we're at this candle. Expect to move somewhere there. Let me just put a line in. Okay, that's the gradient. So now let's see it. Inspect it. There we go. So we'll put in a little. something like that. And then gold we've already discussed. So I'm definitely long gold long term, but be cautious because it will probably bounce off this key level. And if it breaks through the key level, it'll bounce off that level, that resistance trend line. So it's gonna do a lot of bouncing to the downside that you could potentially hedge. But long term, I'm pretty sure it's gonna go long. So, and then this one is down long term. But again, don't just go blindly into it. I mean, I'm leaving these indicators. I'm leaving them gray because we need to see the breakout of this triangle on the dollar index first. That will be our indication. Nothing else. Just the breakout will be our confirmation that trend's over. Time to go short on a Dixie and long on gold. So yeah, that's it for today's video. Hope it helps. Good luck and enjoy.